This conference will now be recorded.
Great. Okay, so welcome everybody to the second Kensington Power 30 webinar. Thank you very much for joining us today. My name's Vicki Harris. I'm the Chief Transformation Officer at Kensington. I'm going to talk to you a bit about a slightly new approach we have for growth today. And then I'm going to hand over to Craig McKinlay, who I think probably most of you know around a particular new product that we're going to be launching. So for those of you who attended our last webinar back in April, we spent that was really focused on discussing the funding challenges facing the specialist mortgage lenders. And if you remember, there was a lot of talk then about how the markets have become very, very competitive. And if you look at this particular chart, you might remember it. 95 LTV rates have dropped by almost 2% in the past 18 months. And in that type of environment, it's just very difficult to maintain growth. And we talked a bit about some of the reasons why that had happened. So what we want to talk about today is how people can react to that situation. So as we observe what's going on in the market, we see that most companies looking to grow have reacted in one of two ways to this sort of increased competitiveness. They're either reducing their prices and/or they're relaxing their lending criteria. And just here we've got a few examples of some of the specialist mortgage players and some of the things that they've been doing. So we, however, believe that there's a third way. Clearly, there is some need to think about pricing and there is some need to think about lending criteria, but there are some other things that you can do as well. So as I take you through this chart, what we have started to think about is the types of product we offer and how we position them in the market. And we think that's a slightly different way to address the issue. So whereas historically this market has been very much focused, the market segments that people target are very much focused around products. They talk about, I have a resi product or I have a BTL product, or they talk about a credit segment. I have a 95% LTV product or I have a 75% LTV product. We think there's a real opportunity then, rather than segmenting the market like that, actually segmenting the market by customer groups. And I'll come on and explain to you what I mean about more detail in a second. Secondly, we think there's an opportunity to think about the real features that make up a product, and rather than think about them sort of as individual discrete features, but to package those instead together to create a sort of proposition, and a proposition that meets the need of that customer segment that you've chosen. And then finally, the way in which we talk about those products, what we observe very much in the market, that it's quite transactional. People lead with what the rate is or what the LTV is. And again, we think there's an opportunity to do something slightly differently and talk a bit more about to message the product more around values than around transactional characteristics. So over the course of the next few minutes, I'll explain to you sort of exactly what we mean by that. So taking the first one of those, customer segments, we've identified a new customer segment. The customer segment are key workers. Key workers is actually a technical government term for public sector employees who are very much involved in serving our communities. So it includes police officers, armed forces, nurses, firefighters, people like that. And we've taken those group of people, we've done a lot of analysis around their ability to repay a mortgage, around what their needs are, and we came up with five specific characteristics, if you like. They're on relatively low incomes, but they do have quite a good income growth trajectory. So a new police officer or a new nurse over the course of their first sort of 5 to 10 years of employment will actually see quite high growth in their earnings. They have the ability to supplement their earnings through overtime. They have pretty good job sustainability. We all know about the sort of shortage of nurses and police officers in this country, so it's unlikely that they're ever going to be without a job. And then finally, as we've done quite a lot of work on looking at these types of people, we've observed that they, in general, have lower arrears than average. They're just better at paying their monthly interest payments than the average person in the street. So sort of to summarize that, these people are, probably struggling to get onto the housing ladder. They have relatively low income, but they do have elevated affordability. And we've used that to try and develop a new proposition for them. So when we think about these workers and how we want to develop this proposition, we've called these workers our heroes. these are people who they're there for our families, they're helping care for our partners, our mums and dads, our grandparents. They're out there supporting our communities day in, day out, offering help and hope when we need it the most. And they offer protection, whether they're a nurse or a police officer or a firefighter. The work they're doing is often at huge personal risk to themselves. And so we've developed a proposition for what we call heroes. Every hero needs a home. And the proposition is very much around their need to get on the housing ladder, but the very fact that they have this elevated affordability. So that's at a high level how the proposition plays out. I guess the final thing on that earlier chart that I showed you was around how we talk about the product. And this comes down very much to how we have evolved the Kensington brand over the past sort of 6 to 12 months. I don't know if you remember, but sort of a year ago, this was the Kensington brand. It was very product-led, very transactional. Back in December last year, we sort of rebranded, and we moved much more towards values-led messaging. We moved away from the more transactional quoting on every advert exactly what the LTVs were or what the rates were, to something a bit more modern, a bit fresher, and a bit more around what makes us different and why are our customers different. So you can see these are two adverts that we used sort of January, February this year, where we talked about the fact that we're not vanilla, and in fact our customers aren't vanilla, and that's very much how we differentiate ourselves and how we and the types of customers that we're looking at. So that was sort of phase one of our brand evolution. As we have developed this new proposition for heroes, we want to take that onto the next level. So we've called this Evolving the Kensington Brand Phase 2. So having moved towards more of a values-led messaging type approach, we're now going to take that even further, continue that journey. And this heroes product that we are about to launch is very much around celebrating those heroes, around really thinking about how those heroes are helping us in our everyday lives and how we can help them. So you can see the sort of advertising here is very different, certainly if you go back to what we were doing a year ago, and even compared to what's on the left-hand side of the page, it's much more around the customer rather than around us. So the new Heroes Mortgage, at a high level in summary, it's the customer segment is key workers. The proposition is around the enhanced affordability that those key workers can sustain. And then the values-led messaging is very much around every hero deserves their own home. And we're going to be launching this product tomorrow. And what we're hoping is that taking this sort of slightly different approach is going to allow us to maintain our growth without having to reduce prices or without having to relax our lending criteria. So with that, I'm going to hand over to Craig, who's going to tell you a bit more in detail about the product itself.
Hello, good afternoon, everyone. So in terms of some of the detail about the product, so if we look at what is this Hero Mortgage then? So which professions are included? So police officers, firefighters from the fire service, NHS, and the NHS is much broader than just say nurses. You've got ambulance drivers there, etc., nurses, clinicians, the 3 armed forces, and then teachers and lecturers, again with a fairly broad definition. And then Vicki talked about the analysis we've got about these customers and how much insight we've got, and that's allowed us to build a proposition that will give up to 5 times loan to income. So typically with this group of customer, we would cap out at 4.5 times, and also a debt to income ratio, which is slightly higher at 55%. And these are for customers who are maximum age of 40, so that could be 40 and 364 days, so it's kind of up to the age of 41. And really good value rates as well, so we start at 2.74% for a 75 LTV, and at the moment they are benchmarked against our standard select rates, which is our most competitive range, and we've taken 15 bips off each of those rates for these hero products as a launch offer. And this goes all the way up to 90 loan to value. So very, very competitive, and should help a lot of these people who will be, by nature and definition, there'll be lots of first time buyers in that group. So to be able to take that to 90 LTV is really helpful. And to give you a couple of examples from the calculators will be on our website tomorrow morning. If you look at the first case, so if you've got a customer who earns £28,000 a year and has a shift allowance of £1,000 a year, we would, on the select range, our current range, we would lend that customer up to £116,000. On the hero range, we'll lend them £145,000. So an improvement of £29,000, and that's at a 5 times loan to income. And then the second example for a joint application. So applicant 1, who qualifies for a hero's mortgage, so is one of these professions, earning £46,000. And applicant number 2, who doesn't have to qualify as a hero, can be another profession, earning £25,000. Under the select range, we would lend those customers £319,000, but actually under the heroes mortgage, they can have £355,000, so £35,000 addition. So that is 5 times loan to income, and that 5 times includes the second applicant's lower income, even though they're not a hero mortgage applicant. So really good affordability, great to help these type of customers, and hopefully that will really help these people get into a home. So other launches we've got overnight, so will be available in the market tomorrow. We've had a young professionals range on very restricted distribution for the last few months while we pilot it. That's now ready to be released. So fairly standard professionals range: doctors, dentists, solicitors, barristers, pilots, accountants, and actuaries. And for these guys, we will lend them up to 6 times income. Again, it's up to the age of 41 at application, minimum income of 35,000, and 6 times income. And because our lending policy allows us, where it's sustainable, to take 100% of bonus, shift allowance, etc., not only do we put more into the multiplier, we then multiply that by a 6. So we think this probably gives us pretty much the best affordability in the market. And then also overnight, we have Help to Buy remortgage, which is clearly a growing market and currently a little bit underserved. And again, Help to Buy Scotland, which is definitely a small, growing and definitely underserved market. So really, Heroes is the next part of our journey towards much more segmented, customer-focused propositions. And you can see we've continued that with the young professionals and propositions to bolster our new build range. So lots of exciting things. And then finally, this really builds on our story of the last year. And I think what we're most proud of as a business are those 2 dotted trend lines, and as you can see on the screen. So the green trend line is our sales over the last 18 months now. So our sales have steadily increased. We've had record-breaking sales for the last 18 months. So thank you to you all for your help and support in that. But surprisingly, and certainly, you know, if you guys will all know better than anyone else, typically when lenders get busy, service worsens. Our service levels, which is the blue dotted line, which is our app to offer time, has decreased. So although sales have gone up, app to offer has decreased, which has been fantastic and put us in a really good service position. And to do that, we doubled the number of underwriters. We've now got our first API when we launched with Mortgage Apply last couple of weeks ago. And we've now got our Axway gateway, so we can do lots of API integrations. We've got robotics for things like solicitor searches, land registry searches, so that the underwriter purely does the hard manual value-added task of underwriting, and we digitize the front end up to the underwriter with things like Mortgage Apply, and then we digitize everything the underwriter, everything that happens after the underwrite. So we'll always have a human underwriter at the heart of the process, but for our own interests, for the consumer's interest and your interests, we want to digitize everything else and make it as seamless, fast, and as easy as possible. And we really aim to have specialist lending criteria, but with high street speeds and turnaround and service. So that kind of concludes our main update for the day. Hopefully some of you have talked about this in previous sessions. We think it's a very exciting initiative. It's our kind of keynote launch for the year. So we're very, very excited about it. Very happy to take any questions on this or more broadly in a second. so please submit them on the webinar. But we've already had a couple in, so we already had 2 pre-questions. The first question we had was, is there any potential of a light refurbishment product? So this is something we have looked at in the past, and I think it's something we'll probably look at again in the future, as I think it's an interesting market and plays out well in a specialist environment where you can take the time to underwrite that customer. So it's not something we are actively planning to launch in the near future, but it's definitely something we have on the radar. And then the second question we had was, what do you see as the most disruptive technology emerging in the mortgage industry? And for me, probably the thing I've been most excited about recently is the idea of using blockchain within mortgages. So I've had some very good conversations on that, particularly like the idea, I think, particularly post-offer, where by having one unified set of blockchain data that anyone can access could really transform how we do things like conveyancing. If everyone has perfect knowledge of public records, etc., potentially some of the open banking feeding into that, I think blockchain could make a massive difference. It does still seem pretty ridiculous how long it takes, you know, the 10 to 12 weeks to go from application to completion on a mortgage, and most of that hold-ups in the post-offer stage. That there has to be ways we can improve that. I know there's things like the digital street from the land registry, but I think something like blockchain could be a great enabler. So I wouldn't really like to call which way the industry will go, but I think it's our job to make sure we're across all the different opportunities, make sure we're talking to all the leading thinkers and innovators so that we can continue to stay ahead of the rest of the industry and hopefully lead the specialist market. So I'll just ask if we have any questions. I don't think we have any more currently. So I would just thank you all very much for your attendance. We will do another one of these in a couple of months when we've got something significant to announce. And what I would ask is, could we please get some feedback? So you can either give it to myself or to give it to Francis or put it on this the webinar system. It'd be really handy if you tell us if this has been a good use of your time, and most importantly, have you got any ideas or things you'd like us to address in following sessions? We normally get asked, can you circulate these slides? And yes, you can, and we can make those available for you. We'll certainly be publishing them on social media. But yeah, if you can let us know if there's anything you're interested in hearing about in the future. And if you do have any follow-up questions or thoughts, please come to, like I say, myself, Francis, or Sharon with those. But thank you for your previous support and your ongoing support. Hopefully this is an exciting opportunity for all of us. We can really help an underserved area of the market and help these people get into homes, and better homes than they would otherwise be able to afford. So here's looking forward to a great summer. Thank you all very much.